For the first time in over a week, the Dow Jones Industrial Average did not hit a new record high. Actually had a little bit of a sell-off here today as the U.S. stock market was a little bit disappointed in the July retail sales number, also having to grapple with some more news regarding the Delta variant of the coronavirus. So most of the indices were down. In fact, earlier in the day, they were mostly down pretty substantially, more than 1%. But we did have a pretty solid rally into the closing bell where most of the indices did close at a point that wasn't quite a 1% drawdown. Now, having said that, there are a couple of nuances that I want to take you through in terms of the posture. And then we also want to get into our trade application example where I wanted to focus on a bearish trade idea within kind of the transportation and travel industry. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 17th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're there, check out our description down below, and there you'll find our email distribution list. That way, you're signed up to receive the notifications whenever these Market Outlook videos are available to you. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. I would encourage you to follow me there for additional information regarding market movements throughout the trading day. We also appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we do have a presence on Facebook as well. Feel free to join our group at that web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into today's trade activity. And as you can see here, I've got chart 4B pulled up in front of us. Those of you that know my routine normally know that if we had a 1% down day, I would show you that other graph that we start with to show you just how regular one-day movements up or down are. But by the end of the day, we ended up closing down just 0.71% here today. So was not as big of a deal. You'll notice, as mentioned in the intro, we did have a long lower shadow here today. Now that's the second straight day that we've had that, but what that signifies is that buyers did show up at some point during the day and pushed the market higher than where it was trading earlier in the session. It's generally perceived more bullishly, and obviously you can see the background color of the chart of the S&P 500 continues to be green, telling us that we do have a strongly bullish posture. Remember that despite today's pullback, we're still above where we were a week ago. So for folks that try to scare you on social media or on business television, saying that this is just a free fall type of a market, just disregard that because this was a very modest day, all things considered. Yes, there are certain patches within the market that struggled a bit more, but for the markets on the whole, it was not that big of a deal here today. We remain above a rising 30-day moving average there with the S&P 500 as well. I mentioned in the intro that the Dow Jones failed to hit a new high here today. That was the first time in 5 days that you could make that claim. Yesterday still stands as our all-time high. Today we did have a pullback. It was somewhat similar to the S&P 500. It was down 0.79%. So again, didn't even close lower by 1% here today. And as you can see, similar formation, long lower shadow there. Not necessarily a great look to see that rolling over at the top, but at the same time, it wasn't as though the bulls just completely rolled over and let the bears dominate. The bulls were there at certain prices in the middle of the day. And so they are still out there looking for value if it exists when stocks do sell off. And that's generally the sign of a pretty healthy market. Now, having said that, we do have to also recognize that we've had some overbought cluster signals here recently on both the S&P 500 and the Dow Jones Industrial Average. Just yesterday on the Dow, you see this red dot showing up here in the market forecast indicator. And then we also had the red dot show up right here on August 11th. And so those are 2 days when all three of the colored lines on the market forecast closed in the upper reversal zone on the same day. And so that's telling us that things have gotten a little bit overheated to the upside, and we shouldn't expect that stocks will continue to zoom at that same pace. It's not that it's impossible for that to happen, it's just that it's less likely when you see those overbought cluster signals. And you can see the same thing was happening over here on the S&P 500 both yesterday and the day before, ended with overbought cluster signals. So not a huge surprise to see a little bit of a pullback and kind of burning off some of that fat here today. And don't be surprised if that continues for a bit of time. We have an example down below of the Nasdaq that gave us an overbought cluster signal back here on August 4th. Remember, the Dow Jones and the S&P 500 were not giving us that signal back then, but the Nasdaq was. And you can see here that the Nasdaq basically just went sideways for a while. So it didn't have to end in disaster, at least not yet. We'll see. Obviously, every day is a new journey, especially when we're dealing with geopolitical concerns with Afghanistan or whatever's happening with the internet decisions over in China. There's always something that we have to kind of grapple with as investors. But what we see here from the Nasdaq is that after going up at a pretty healthy pace, you can see some of these other red dots that showed up earlier in this 3-month period as well. We've now kind of just gone sideways. So it's not some sort of disaster scenario that requires the market to melt down after having an overbought signal. It can work itself out just by simply going sideways. So who knows? Maybe that's what we have in store right now. The path of least resistance for the S&P 500 and the Dow Jones Industrial Average continues to be to the upside, with that rising 30-day moving average guiding the way there. You can see that it's still that green color, telling us that price is above a rising moving average. Now, having said that, that's a good segue for what I wanted to mention regarding that little statement I made during the intro, that there were some nuances that you'll want to be aware of. Specifically, down below here in the lower left-hand corner, notice what happened with the Nasdaq composite today. First of all, it was down more than the other two indices. It was down 0.93%, so it fared worse than the other large cap indices of the S&P 500 and the Dow Jones Industrial Average. That kind of gives us a little bit of a sense that the kind of tech stocks and growth-oriented companies were struggling a bit more. For those of you that were following me on Twitter today, I was referencing Michael Burry and his bet by buying puts against Cathie Wood's ARK investments, which oftentimes have disruptive and innovative companies in there, including stocks like those CRISPR companies that many of them got worked over today, in addition to a lot of the internet names and the high-tech stocks. And of course, those are the areas that kind of congregate within the Nasdaq composite, as opposed to more of the blue chip indices like the S&P 500 and the Dow Jones. So I wasn't completely surprised to see the Nasdaq suffer worse than the other two. But the reason I'm bringing that up right now is you'll notice that there was an important situation that happened here from yesterday's trading. And so from yesterday's close to today's close, you can now see this candle went from being above the moving average to now being below the moving average. Not only that, but strangely enough, the moving average itself actually turned red. Remember, that's actually pretty rare. Usually there's a yellow transition that takes place there. What that script is doing on our charts, remember, all of you that are premium members have access to all of our charts, all 50 plus of them. In fact, I've got something else in the works right now that I've been working on this afternoon in regard to some really cool cascading gradient effect on our watch list for those of you that are part of my top-down trend trading class. So be on the lookout for that in coming weeks once I kind of get it finalized. But anyway, it's a big perk for those of you that are premium members of Market Scholar. So if you're not one yet, we would highly encourage you to go over to our website, click on our pricing tab, and start investigating whether our subscriptions are right for you. But anyway, for those of you that do have access to this chart 4B, you'll want to know that the moving average, in this case is a 30-day moving average, it is going to change color based upon what direction the moving average itself is going, and also where the stock candle is in relationship to the moving average. And so when price is above a rising moving average, it has a green background, or not green background color, but green color of the moving average itself. When price is below a falling moving average, it has a red color, and that is what has happened here on the Nasdaq composite. And again, it's fairly atypical. Usually you have a transition period. For example, over here on the Russell 2000, you'll notice that we had this green moving average. At the beginning of July, it started transitioning into a yellow moving average and then moved into a red moving average. Usually you don't go green to red, because what's happening is price is above a rising moving average here. The moving average as a lagging indicator continues to rise in many cases when the stock is already falling. and therefore has kind of that neutral yellow color. And then eventually, if the stock stays down long enough, it then starts turning the moving average lower along with price being below it, which creates that red moving average. So this is a bit peculiar in that we went straight from green to red without any yellow in between. So it just so happened that because of this overbought cluster signal over here, we already had enough price pressure on these candles over the last 2 weeks in the Nasdaq composite that it was enough to actually start tilting that moving average lower. Just be aware that that is not necessarily the most bullish of signs. You can see the background color of the chart remains dark green. What that is using is some script to be able to determine what is the market forecast intermediate posture. Remember, unless you hear David or I say otherwise, if you hear us talking about posture in general, we're referencing the intermediate line. As you can see here in the label, the intermediate line is at 82.50 and falling. That's this green line down below here. Now you can see that it's in the upper reversal zone, and for those of you that weren't aware before, just be aware that on the market forecast technical indicator, which you can find on the Thinkorswim platform, the 80 zone is considered the upper reversal zone. So it's a little bit different than stochastic. A lot of people know stochastic, the upper reversal zone is 75. Anyway, on the market forecast happens to be 80. So as long as it's above 80, whether it's falling or rising, we would still consider that to be strongly bullish. So that's why the background color of the Nasdaq remains dark green, telling us that we still have a strongly bullish posture, yet we do have one kind of fly in the ointment there, some conflict, where we now have price below a falling moving average for the first time since back here. Right, back here on June 3rd. That's quite a long time ago. Now, good news is you can see back here, it only lasted for 1 day. But you can also see back here that red moving average stuck around a lot more back here in May. So we'll find out soon enough. Keep in mind that this is an important week for the stock market, or I should say the options market, because Friday is options expiration for the August contracts. And so we might see some volatility moving into the weekend here. Whether that's up or down, volatility depends a lot on what's going on with geopolitical concerns, and then also what's going on with earnings. Those of you that follow me on Twitter know that I was chatting about the retail earnings that we are to be expecting here over this past weekend. So this is a big retail earnings week. Home Depot came out already. Walmart, I think, was after the bell tonight. Target and Lowe's and Ross Stores and TJX and Macy's. It's a big retail week. So depending upon the sentiment that comes from that, it's possible that we could either move up or down strongly in the last couple of days here, but be on the lookout for that potential pin risk that the market makers might be pushing the stocks around a little bit as well because of where they're positioned going into the options expiration weekend. So we have a little bit of controversy here, let's say, with the Nasdaq composite right now. It remains with a strongly bullish posture, but we do have evidence on the board that it's not all that meets the eye. There is some bearishness creeping into the system now with that particular index trading below its falling 30-day moving average. Now with the Russell 2000, you can see it was actually down the worst today. It was down 1.19%. Now having said that, we've already been bearish on the Russell 2000, so that's not as big of a surprise situation as what we saw there with the Nasdaq composite. This moving average, as you can see, has been red not only for the last 3 days, but if you were to look back over the last month, the average color on this moving average over the last month has been red. You've had a little bit of yellow that's kind of been mixed in there occasionally, but this has been a path of least resistance to the downside for the small caps. So in addition to having the pink background color that suggests that the intermediate posture is now weakly bearish, remember, now that this one is no longer in the upper reversal zone, like the other three, notice those green lines are in the upper reversal zone. The Nasdaq has a very good chance, by the way, of falling out of that upper reversal zone in the next couple of days before this weekend if there is more pressure within the stock market. So do not be surprised at all if this background color on the Nasdaq does shift to light pink by the end of the week, just like Russell 2000 is already there. But the Russell 2000, notice that in its bounce here over the past month or so, the most it could muster in terms of its green line was up here to about 56 or so. It couldn't even get remotely close to 80 in terms of where it's placed on the market forecast. So like I've been mentioning to you guys, and I'm sure David has as well during his videos, without a doubt the Russell 2000 has been the laggard and remains the laggard at this moment in time. You can see a nice bounce down and away from that falling 30-day moving average. So if you're looking to pick on a particular area on the market and put some bearish trades in, then the Russell 2000 could be an interesting place to do that. For those of you that attend my factor-based swing trading class on Wednesday mornings, you'll know that the small cap or low size factor has been the worst performer on our factor selector tool in recent weeks, and I would anticipate that it will be once again tomorrow, and we'll be looking for short selling opportunities within that area. So feel free to join me if you're a plus or a premium member tomorrow morning at 11 a.m. Eastern time if you're interested in that conversation. So let me take a quick little look here at the 3 green arrows chart, and 3 green arrows is chart 4D for those of you following along at home. You can see that we've got quite the differences in our charts all of a sudden. We've actually got examples of all 3 possibilities here for this particular chart. Remember, the background colors on these charts will tell us whether we have 3 green arrows, 3 red arrows, or a mix of green and red arrows. If we have 3 green arrows, we'll have a green background color, and that's what we see right now on the Dow Jones Industrial Average. Remember, 3 green arrows is just referencing 3 different technical indicators and whether they're considered bullish or bearish at any given moment in time. Well, the Dow Jones, you can see on the 30-day moving average, earned its green arrow back here on July 20th when it jumped above its moving average after a brief moment in time below it. So just the prior day it was a red arrow, went right back to a green arrow the very next day, and has been above that moving average since then. In addition to that, the MACD histogram also has a green arrow at this moment in time, suggesting that we do have positive momentum behind the price of the Dow Jones Industrial Average. And then last but not least, we do have a green arrow as well here in the category of stochastic, which is suggesting that price is closing closer to the highs of its ranges rather than the lows of its ranges over time, which is another typically bullish feature. So right now, we do have a 3 green arrow signal on the Dow Jones Industrial Average. That's great news. However, it's the only one that can say that, because as of today, the S&P 500 did lose its 3 green arrow status with the red arrow that came in here on the MACD histogram. There's been enough of a loss of momentum there where it has rolled over, but it's so close to the 0 line. This is a situation where you could get that green arrow back as soon as tomorrow. So just be careful putting too much information into that just one little itty-bitty piece. But right now, we have a mix of green and red arrows on the S&P 500. The Nasdaq composite now has 3 red arrows. That's new information. Again, the reason for that is we already had the red arrow on the MACD histogram. We already had the red arrow as of yesterday on the stochastic, and today we got our 3rd and final red arrow on the moving average because it closed below that moving average, as I referenced before. So we now have a 3 red arrow signal on the Nasdaq, and that joins the Russell 2000, which already had a 3 red arrow signal as of yesterday when it got 2 red arrows on the MACD and the stochastics there. So kind of an interesting mix of 3 green arrows, 3 red arrows, and a mix of green and red arrows, which is fairly rare because a lot of times stocks kind of follow each other universally. But right now we're seeing a little bit of discrepancy here. And what this is telling me is that the market is trying to hunker down in your large cap or mega cap names in the Dow Jones Industrial Average, where it feels a little bit more comfortable, and it's kind of shying away from some of the more high octane areas of the market like the Nasdaq composite and some of the more controversial smaller companies out there like the Russell 2000. All right, let's go ahead and take a peek on over here to the internet. I always like to get a chance to say thank you to those of you that help support this project. When I did the video last time around here on Thursday, when I kind of lucked into the skin position there, which I had no idea the very next day that it was going to be brought up on CNBC by the Nigerian brothers and also by, what's his name, Kevin O'Leary. This was an unheard of company, and then all of a sudden gets mentioned a couple of times on CNBC. So we got awfully lucky on that skin one there. I'm glad I was able to highlight that particular stock for you guys on Thursday. I was hoping we would get over 100 likes for that. In fact, when a stock goes up 11% after the day I present it to you guys, I would hope that it was worth your 5 seconds to click like on that. So glad that we got over 100. A little bit disappointed it wasn't more than 106 in this case. Nonetheless, for those of you 106 that took the 5 seconds out of your day to say, thank you, Brandon. I appreciate you bringing that to my attention, and I'd like you to do the video more often in the future. Thanks to all of you who were able to make that happen. So new low observer, we had Catherine, Jeanette, Deborah, Dennis, Victoria, NZ, Ken, Kirk, Paul, Gerald, Jayesh, Lloyd, Craig, Donald, Surendhar, Coker, Kenneth, Dave, Michelle, Austin, Richard, Pamela, Judy, Dave, Rick, Janet, Marty, Brian. I see y'all, and there's too many to rattle off here, but all 106 of you, I appreciate you. Thank you very much for that. Also, while we're over here on the internet, let's go ahead and take a look at our sector selector, which, remember, this gets put out on the weekend, so it's a couple days old now, but this was as of Friday's closing information, so it gives us generally a good sense as to any sector movements we might be seeing within the market. One thing I would point out is that healthcare moved back up into the number 2 slot. And as we'll talk about here in just a little bit, healthcare was one of today's big winners. Healthcare was gliding right along as though it didn't know the stock market was in a foul mood here today. So not going to sit here and say that the sector selector predicted that, but it is good to see it kind of in unison with the way that I am ranking these sectors out there, where we are finding some of those areas that are exhibiting some strength. One of the stocks that we bought here recently in our top-down trend trading class is Pfizer, and that stock has just continued to rip higher and is surpassing its highs from way back in 1999, as I mentioned to you guys here in this video last week. And today was another great day for Pfizer. So that's kind of an example of some of the areas where the market is rotating to right now, those big well-known kind of pharmaceutical-oriented areas, maybe even like Johnson & Johnson and some of those biotechs, hit and miss depending upon circumstances there in the biotech world, but even in some of the life sciences and the testing and equipment types of areas within healthcare, there's a lot of really interesting looking trend trades within healthcare right now, so keep your eye on the ball there. And then on the downside, we had a pretty big spillover there in the industrials, as industrials fell from number 5 down to number 7, and keep that in the back of your mind because it will factor into our conversation at the end of the video here today, where I do my trade application example. All right, let's go ahead and also remind you that on our calendar, you can find the recordings from our previous classes if you weren't able to hit them before. So if you want to find out what REIT we bought in my top-down trend trading class yesterday, the recording is posted. If you wanted to find out what industrial company we bought in our dividend growth investing class today, that is also posted. Tomorrow morning, I'll be doing my factor-based swing trading class at 11 a.m. Eastern Time. Look forward to seeing many of you there as we talk about both bullish and bearish trade setups for that particular class. All right, let's get back on over here to the Thinkorswim platform, and let's do some 12 grid analysis with chart 5A. And so this will be our asset class 12 grid. A reminder that the background colors of the charts will tell us whether the intermediate posture is bullish or bearish at this particular moment in time. And so as we see here, there's a lot of mix on this first 12 grid, which is often the case. Remember, this is a wide variety of different asset classes, so you're oftentimes going to have some bullish and some bearish. So as we're looking at this, let's try to pick out any kind of trend continuations or perhaps reversals or bounces, or just see what we can discover here. One thing I would point out is up here in the upper rung, the Chinese stocks are again really showing a negative impact to the EEM, which is our emerging foreign stocks. Remember that Chinese stocks represent by far and away the largest country within EEM, and they are just getting stomped on once again. You can see that we have had four in a row down days for EEM, and most of it is because of some of those Chinese companies, in particular the Chinese internet companies, really struggling. Alibaba comes to mind, Tencent comes to mind. Those types of companies, Pinduoduo, we've got JD.com, all those companies just getting stomped on right now, and that's really having an ugly impact on the emerging markets. Look at the emerging markets in relationship to what's happening with the developed markets. These are the countries like in Europe, in Australia, and Japan, and elsewhere that are already developed. They're actually hanging in there just fine. They don't look as good as the United States. The United States still looks like it is the strongest chart around from a general perspective, but you can at least see where there is some interest in the developed markets of buyers overseas. Whereas in the emerging markets overseas, you got to be awfully careful. There's a lot of landmines out there right now. So a stark contrast between the different areas from a foreign perspective out there right now. If you're looking for bullish setups, you probably are a little bit better off in the developed world. If you're looking for bearish setups, well, there's probably a lot of them in the emerging markets, in particular China, that might be setting up for bearish trades there. In terms of other charts that are of interest, I would say that the US dollar is interesting to me. US dollar was up 0.60% here today. And while we're not quite at a 3-month high, we are knocking on the door of that. That could happen as soon as tomorrow. Typically, when the US dollar is strong, it tends to benefit US stocks versus foreign stocks. And that was the case here today, as the SPY was down the least amount compared to EFA and EEM. And another thing that the US dollar can do is have a negative impact on commodities. You can see that gold was down just a touch here today. I retweeted an interesting article about Palantir buying gold as almost like a kind of a jab at those folks that like Bitcoin. I have a feeling there in that particular case. But nonetheless, gold was down a touch here today, possibly weak as a result of that US dollar strength. And then we also saw oil struggling here today, down 0.98%. Now, of the two charts, it does look like gold has stabilized a bit more recently compared to oil. Notice the background color of oil still that dark pink, telling us that we have a strongly bearish posture. It's still trading below its falling 30-day moving average as well. Gold is trading below its falling 30-day moving average, but its background color is that light green, telling us that we have a weekly bullish posture in that particular case. But I'm not overly enthusiastic about the chart on gold. As you can see, we broke down below that prior support level on this move about a week ago. And yes, we've had a nice reversion to the mean type of a rally here on gold. But I think if I were forced, I would probably try to initiate another bearish trade on gold at this moment in time rather than getting excited about a bullish one. And remember, we have a bearish gold trade that's rolling off the books this Friday, where I did a bear call spread on GLD. So I'll keep my eye on that, and we might in a week from right now put on another trade on GLD if there's a setup there. But what I'm thinking in my head right now is it's probably going to struggle a bit right around this 30-day moving average. And if it looks like it's going to start rolling back over to the downside, let's say a week from today, who knows? Maybe I'll put on another bear call spread on GLD right there. Interest rates were pretty steady today. We had a slight tick higher in interest rates and a slight tick lower in bond prices, but it's not really anything to even spend a whole lot of time talking about, because that was a bit of a non-event there in the interest rate world here today. Let's go ahead and take a look at our sectors here briefly. Chart 5C for that, for those of you that are premium market scholars following along at home. And as you can see here, we do have one dark red chart on the board, and that is energy. Again, the oil and gas stocks are struggling, partially because oil prices themselves started rolling over here more recently. And you can see here, this is not a great looking chart. In fact, I was pretty close to doing a bear call spread on something like Chevron or Exxon here today. Opted to go a different direction, but nonetheless, if you're looking for bearish trade setups, seems like there's plenty of them available there in the oil patch right now. We have two other pink charts on the board, which is communications and discretionary, but those are light pink colors, telling us that we have a weekly bearish posture, not a strongly strongly bearish posture like we saw there with energy. In particular, concern was discretionary itself here today. This was a pretty massive meltdown of 2.37%, by far and away the worst performer here today. Now keep in mind what I've mentioned to you guys regularly, which is the discretionary market cap weighted ETF, in this case XLY, is heavily influenced by Amazon, Home Depot, and Tesla. And so when you have a situation like today where we saw Tesla down 3%, we saw Home Depot down 4%, and then Amazon was down 1.7%, that's going to cause an extreme reaction to XLY. So remember, if you wanted to look at a market cap weighted version of it instead, that ticker symbol is RCD. And it was also down here pretty substantially here today. But notice the background color on RCD remains strongly bullish, or in that green background color there. So there are some differences depending upon whether you're going with the more traditional market cap weighted approach versus the equal weighted approach. In terms of those areas that did well today, I wanted to highlight healthcare. I mentioned that earlier, but healthcare, even before we had the turnaround in the market today, so I mentioned before that we had a nice rally into the close for a lot of areas within the market. Even before that, at the lows of the market today, healthcare was still green. And you can see that it just built upon its momentum as the day went along. I was tweeting about Gilead here a moment ago. Gilead is at new 52-week highs all of a sudden, in addition to what I mentioned before with Pfizer and others. So take a look at these candles here on XLV. And this is one thing that I've been talking about with you guys here for the last, let's call it month, perhaps 2 months. Even before healthcare was ranked extremely highly in some of our other ranking methods, I was kind of just noticing that it was doing really well, holding in there, and now it's really showing leadership role. Look at the way that this thing ended. I mean, it went up by over 1% today on a day when a lot of people were nervous about the market. A lot of people felt pain in the market today. Healthcare was up over 1% at a new high, and not only that, but basically closed at the dead highs of the session. That's a strong looking candle right there. Let me right click and show you here what that candle looks like. That's an aggressive candle following up yesterday's aggressive candle. So this is the fourth straight up move for XLV. Looks really sharp right here. So really glad that we were able to get a couple of those healthcare trend trades under our belt in that Monday class, because we've been benefiting from those moves here in recent sessions while the bears have been on the prowl in some of those other sectors. All right, with that out of the way, let's now get into our trade application example. And for it, I wanted to focus on kind of the bearish side of the equation. Let me pull up chart 4A here, and the ticker symbol in question is DAL, and this is Delta Airlines. This is a chart that is setting up more bearishly here recently. And you can see today we had something different that happened to the chart, and that is the background color of the chart went from light green yesterday to dark pink today. And what that is telling us is that this green line on the market forecast technical indicator has rolled over. So we now have a strongly bearish posture on this. Now, this is more of a bounce down play from the moving average, which is why it originally caught my eye. I was going over charts over the weekend, and I had written this one down as being a potential setup for the video here come Tuesday. I didn't know, of course, what would happen in the next couple of days, but the reason I'm bringing that up now is it is a little regretful, because as of Friday's close, I really like the setup. That was Friday's close right there. Yesterday, it went up just a touch, and then it really sold off hard today. So do I wish I was in this as a bearish trade prior to today? Absolutely. But it is what it is. You're not going to be perfect with your timing, especially when I only do this video on Tuesdays and Thursdays and not every day of the week. So are we a day late on this one? Perhaps. But is the setup still there? It is, because this one has struggled to establish a presence above that 30-day moving average. You can see that Delta Airlines has really been struggling since topping out here at about 48 back on June 1st. It has spent the vast majority of its time below this falling 30-day moving average here along the way. So if you're a believer in trends where lower highs and lower lows leads to even further lower highs and lower lows, then this is one that is in one of those downtrends right now. Whether it works out successfully for our particular trade or not is anybody's guess, but I think we can all agree that this is a stock that appears to be in more of a downtrend than an uptrend like we see in so many other cases within the market. One other quick thing did catch my eye with it, which is we have a little bit of a bearish near-term divergence. It's not a perfect setup, but it is at least an example of it. So notice on the blue near-term line down here on August 6th, we were at a slightly higher level on that peak on the blue near-term line than where we were here when we peaked again on August 11th. So this high within the indicator is higher than this high within the indicator. Yet the two candles associated with that from a price perspective are this candle right here and then this candle right here. So price went up on a day or during a time period when the indicator down below was showing us more bearishness. So the main reason behind the trade today is a bounce down and away from the falling moving average in addition to the strongly bearish intermediate posture. But you have a little bit of a bonus item in there with the bearish near-term divergence as well. So what I opted to do in this case was to sell a bear call spread. And of course, the trade was already done during the market session today and was sent out to all of you who are premium members of Market Scholars via our Telegram Trade Alerts app. And what I did there was I sold I think it was the 41.42 bear call spread for the month of September. So that type of trade does not require a massive move lower. All it requires for us to be successful with it is for this stock to stay kind of below the tops of these candles over here. Right at the tops of those candles is around, let's call it 41 to 41.50. So if you think that this stock, which is kind of rolling over here, is going to stay below the highs of these candles over here, then we'll have a good chance of making money on this trade in the next month or so into the September contracts. And we were able to get about a 30% return on risk, which is typically what we shoot for when we're doing trades like that. So basically, it's a trade where if the stock ends up going sideways, we're okay with that. If the stock goes lower, we're fine with that as well. If the stock goes up, we just don't want it to go up above these highs from this kind of week where it was trading here at the end of July. If it goes above then we'll lose money on the trade. But remember, this is a risk-defined trade, so we know what our worst-case scenario is going into it as well. So anyway, thought we would throw out a bearish trade idea there for you to kind of balance out the portfolio a little bit. So I hope you enjoyed the presentation tonight. If you did, I ask one simple thing out of you. Help support the Market Outlook video on social media. In particular, on Twitter is what I pay most attention to. So if you want to help your chances of getting me to do this video again for you on Thursday, go ahead and click like for me there on Twitter. If you don't want me to do the video on Thursday, don't do anything. We'll get that message as well. So these videos are always voluntary, and we hope that you get value out of them because it does take a pretty big effort out of us to be able to put them together each day. So do your part, and we'll do our best for you in return. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.